Alrighty, good morning traders and happy Friday. Hopefully everyone's having a fantastic week so far, and we're going to go ahead and take a look at the markets, and also hopefully everyone is excited about the weekend so that you can go ahead and stay away from work and just relax around the house. Okay, so we're doing that already in quarantine, so alright, I guess the joke is it's getting a little stale, right? Hey traders, we had a good, well, let's put it this way, we had a slow week of trading this week. Not a lot of positions picked up. We did pick up some new positions on a couple of other pairs as we looked at the forecast for the week on Monday. And so this morning we're going to go ahead and just take a look at this. Remember, it is Preachy Friday. All right, this is where I get to tell you that you are wrong and I'm right, and I'm always right. Okay. So if you're doing something wrong, I'm going to point it out and say, shame on you, all right? Don't be offended, I'm just being real. But we're going to go ahead and talk about this morning. A lot of trading opportunities that traders may already be in from the previous weeks. I know that there was 2 trading opportunities. When I say that, I'm referring to trading opportunities on a currency pair, right? So there were 2 currency pairs that were already got into and traded a couple of weeks ago. I think one of them was the pound, the pound CAD and the euro pound. That we're still holding on to. And then we've got a couple of more that took place this week. So let's go ahead and take a look at the market setups right here. And we've got a couple of traders in the house already. Karen, I got your email. Appreciate it. Thank you. I'm glad you got in. We did have a little bit of a late start this morning. A few things I had to get sorted out before we could get started this morning. Denise is in the house. Actually, it's Denise. We've got Jordan, a new trader right here. So let's go ahead and take a look at a couple of things right here. And we're going to go ahead and take a look at the setup this week. This is the weekly setup. You can see that we do have a few trading opportunities that we need to pay attention to. And we're going to go ahead and mark that off. Now, this is for those that are new to the session, I want to go ahead and make sure that everyone understands what's going on right here, because some of you might be looking at this and saying, well, big dog, I don't even know what the spreadsheet means. All right, so for those that are new, the spreadsheet basically breaks down what opportunities we're looking at this week. We fill this out on a Monday, and then on a Friday we go ahead and complete it, because either we have a target that is active, or we have a target that has been hit, or we have a target that's going to be unhit but not even traded this week. And we're going to be talking about that as well. So as you can see right here, we had a lot of unhit targets. Those are the ones that we really want to pay attention to, right? The unhit targets are the ones that create the opportunity for us to trade that week. Now, I want you to hold on to the session a little bit longer. Stick around towards the end, because towards the end, I'm going to reveal another trading session that we're going to be starting next week. I'm still trying to figure out the details. I may even push out a video out today about that, but I'm going to talk about that towards the end of the session. So let's go back and take a look and see what we've got going here. So if we go to this document right here, and we look at, sorry, I got to take another sip of my coffee this morning. It's one of those weeks that you just drinking a lot of caffeine. So, and it can't be called the morning, the Forex morning coffee session if you don't have a cup of coffee, right? So get your cup of coffee. If you haven't got it already, get your coffee, all right? Get it. And so this is what we're looking at right here. So we're checking out the setup right here, and we can see that we have a bunch of opportunities. Now, let me go ahead and move my chair here so I can get real comfortable as we go ahead and chat about this. There we go. Okay. So let's take a look and see what we've got here. Let me move my screens a little bit. There we go. We've got a couple of things here. We've got Euro Aussie. Euro Aussie was an unhit target. So let's go ahead and check that out. Let's go to the chart. Here's the Euro Aussie. And so when we talk about the Euro Aussie, we're referring to the Euro Aussie based off this right here. You see this orange line? This is what we're referring to as our target. And this is our weekly target for this week. And as price goes ahead and moves around, we actually got pretty close. You can see right here, we actually traded pretty close to that level right there. But this is where we got picked up. We got picked up when price moved into an oversold condition and then went north. We actually saw a little bit of divergence taking place right here. Yep, absolutely. Check this out. We can see price and momentum are disagreeing right here. As price moves down lower, price moves lower, and the oscillator moves higher. We eventually got a trend line break right here, and price went ahead and broke, retest, and then went off and rallied up towards that target. We did not get to the target. All right, we did not get the target. Why? Okay, we have to know why, right? If we don't know why, then that's the problem. So let's go ahead and figure out why did the market not get to the target. Let's take a look at the larger time frame. So this is what the larger time frame looks like right here. So we're totally bearish on the Euro Aussie, right? But the good thing is this, all right? You might be thinking, well, Big Dog, why are we buying? Are we crazy? All right? Why are we buying? Well, we're buying because we're expecting some sort of correction move. All right, and we're not trying to pick the bottom. No, we're not trying to do that. But what we're trying to do is leveling in on the correction move. All right. Now, sometimes we may be actually in a trade when it's actually in a trade. So if you look at the overall direction, what is the overall direction on this particular pair? If you look at the overall directions and look at the trend, we are overall bullish on this. Look at that. All right, at least in the midterm. All right, we're bullish. So if the market's going to move down south, then this is a corrective move towards the upside. All right, so it's going to correct down south. We're going to then go ahead and move north. Now, the deal is this. It's coming from the north, heading to the south, which means that we're heading into a corrective move in the midterm. But in the short term, and I'm referring to the short term because the short term is the correction, right? The correction move is what we're referring to as the short-term move. And so the short-term move is expecting price to go ahead and correct in this downward move. Well, let me explain it this way. So if you take a look over here, you see price is moving down. We're expecting it to correct itself and then continue to work its way back down. So this is the short-term move right here. So we're bearish in the short term, expecting a slight bullish move and then head down. This is the reason why we've got some buys in here that I'm comfortable with, all right? All right, there's some trades that you might be looking at and you go, well, I don't feel comfortable about this, and I get it. But in this case right here, this is the reason why we would feel comfortable holding on to this these buy opportunities, right? And so if we look over here, as price dips down, okay, we are going to say, well, we're comfortable with that, all right? We're cool with this, all right? We understand that price is going to go ahead and want to work its way back down, but eventually it's going to come back up to its target, and we're going to stick around and stay in this trade. Now, let's take a look right here. Are we in on the Euro Aussie? Yes. We only got one position in on this, all right? We only got the one trading opportunity right here. Okay, so we're in on this trade. We got in on this trade, and that's where we are at. Okay, let me see here my exposure. Okay, so we're in on that trade, and we're riding the wave towards that target. Right, we're in on that. So we're going to go ahead and continue to trade this. If I go to the Euro Aussie right here, this is what it looks like on the Euro Aussie. Where is it? There. No, where is it? There it is. All right, so this is what it looks like right here. This is where we bought in, and we're going to continue to ride it up to its target. All right, when we get out of this, once it hits its target, we should be able to pick up about 373 pips. Okay, about 373 pips once price gets to that target. All right, now let's go. Hold on, is that calculating? Yeah, that should be right. Let's see here. Let's double check it. Yep. All right, perfect. All right, so this is the deal. So we're in on that trade, and we're going to be comfortable with that position. We're holding on to that position. Let's take a look at the next opportunity. Here's Euro CAD. Oh, by the way, let's update the document. So the document right here, we are active at the moment right now. So we're in a buy on this, and we are active. All right, so we're active on that trade, and we went in based on an oversold condition, and we're buying. Let's go to the Euro Canadian. Hold on. Euro Canadian was a hit target this week, so move on, right? Anything that's a hit target, move on. We don't even want to focus on those currency pairs that are hit target. JPY, yeah. Euro JPY, hit target. Move on, all right? Move on. Let's go to the Euro New Zealand dollar. Euro New Zealand dollar was an unhit target this week. Let's see if we got picked up on this trade, if the opportunity was there. And here is the Euro New Zealand dollar. If you look at the Euro New Zealand dollar, price did move up to that target. So we do have a hit target, but we never went into an oversold condition. So what are we going to do? Just simply go ahead and move on. All right, I'm going to go ahead and say this is a hit target for the week and no opportunity. So go ahead and mark it off as a hit opportunity or hit target. Nothing here on pending, no trade. In fact, if you want to leave it pending, you could, but we're going to cancel all pending orders. We have to cancel all pending orders. All right, let's go to Euro Pound. Now, remember the Euro Pound we were in already last week. So let's see if there was a new opportunity for traders this week. And this week, let's see here. Price did move down about here. Nope. So the price never went into an oversold condition. No, it did not. So we're not in a trade this week. We do have an unhit target, but there's going to be no more trading this week on this particular pair. We are currently holding on to a previous trade. Take a look right here. You see that target up here at the top? All right. Well, that target is what we're looking at chasing after. If I break the market down right here, notice that we have a wave 1, 2, 3, 4, and 5 down here at the 127. All right. So we're in a wave structure. If you don't know what that is, it's an idiot wave structure in a 5-wave sequence, and price is going to try and move down to the 5th wave, which is down here at a 1.27 extension. That's a fib number. That's a fib extension of the latest downward move. All right, from 2 to 3, creating 4 retracement and then 5 extension. Too much information on a Friday? I get it. All right, but don't worry. You get to drink wine and any hard liquor tomorrow, all right? In fact, it starts this evening because quarantine has been all week. You can drink on the weekend, all right? All right, so this is the deal. We're going to go ahead and look at price that looks like it's going to come back to this level right here. See that? So I've already considered that I'm in on some buys on the Euro Pound, but I'm already considering that Euro Pound may want to go ahead and dip a little further down south, get to this level right here, and then only then want to move back up again. So it means that I'm probably going to go ahead and pick up some more positions on this before price moves up again. And that's okay. I'm going to be okay with that. All right. And at the moment right now, if we take a look at where we're at on this pair, this is the Euro Pound right here. I'm chasing after that target right here. I'm going to want to pick up about 285 pips. So as price moves up to that target, I'm looking at about 285 pips as of right now. And that's where we're at. So price is trading a little bit lower. We're not in the money on this one right here. All right, we are actually out of money on this trade, and it's down approximately... Let's see here. We're down about 90 pips on this trade, right? We're down about 90 pips on this trade. And then if it does go back up again, like I said, it's got to rally up approximately 380 pips. You might call it 378 pips, right about there from where it's trading right now. So we're going to hold on to that trade. And yes, if we do pick up new positions, in fact, it looks like about 168 pips lower, I'll pick up a second position on this trade. So it's 90 pips in the red. If I go down another 70 pips or so, I'll pick up another trade. Actually, about 80 pips, I'll pick up another trade. So I'm going to hold on to that over the weekend. So certainly going to hold on to the Euro Pound over the weekend on this. But let's go ahead and update the document for this week. This week, we're going to cancel all pending orders. And there's just no trade, all right? No trade this week. And yes, it's still an unhit target, all right? It's still a target that has not been touched this week. Now, hold on. All right. At the end of the session, I'm going to be talking about the new trading session that refers to unhit targets that have not been hit, that become missed targets. And we're going to talk about trading those in the next towards the end of the session. All right, so stick around. Euro US dollar right here. Let's take a look at Euro US dollar. Euro US dollar. Take a look right here. A no-brainer. Price has gone in, hit that. We didn't have a trading opportunity. So price has hit the target this week. We call it a hit target. Cancel all pending orders. And there's no trading opportunity this week. It was a low probability that we've labeled it as. So it is what it is. So we only picked up the one trade right here on Euro Aussie this week. And of course, we're carrying on with the trade last week on the, a couple of weeks ago on the Euro Pound. So let's go to the pound JPY. There's a bunch of pound crosses that have unhit targets. So let's go to pound JPY first. Pound JPY hit target this week. No trading opportunity on pound JPY this week. Let's go to pound New Zealand dollar. Pound New Zealand dollar also hit target this week. Let's go to pound Aussie dollar. Pound Aussie dollar also a hit target this week. Moving on. All right, let's go to the next one. Pound US dollar. Pound US dollar seems like an unhit target and looks like an opportunity right here. So let's go ahead and first update the document on all of these right here. So all of these pairs have been hit targets right here. So we're going to go ahead and make sure that we clean up our document. And we are going to mark these off as no trades. So these right here were no trades. We did have two of them with low probabilities, but no trades on those. Now, pound US dollar. We do have an opportunity, and take a look right here. Price moved into an oversold condition right here at the top, and we're selling to the downside. Oh, you know what I forgot to do? I forgot to add in our position right here on the Euro Aussie. What is our trade? What is our entry point on that? Let's take a look here. There we go. It's at 7104. All right, there we go. So here we have the pound US dollar. It looks like we have a trade on the pound US dollar. Let's take a look and see exactly where it would have been right here at the top. So let's go to the let's go take a look and see if our trading system, our robot, did pick up that trade, and there it is there. So the entry point on that was at what, 21.96? So, sorry, 25.96. My bad, 25.96. Let's go ahead and put that in, 25.96, and it is here. All right, 25.96. That's in, and this one's active. And we are currently looking to sell. We are selling this one right here. And it's on an overbought condition. We sold this on an overbought condition. Right here. So we are selling right at the top there. Price got to, let's take a look here. Price got about 33 pips away from the target. Let's take a look at this pair from a long-term perspective. And by the way, you can also look at divergence if the price is moving closer and closer. Check this out, right? If you're thinking about getting out of a trade a little bit early and you're paying attention to the market, I want to give you a little bit of an inside secret about how to pay attention to the actual target and when is it time to actually take a look and cash out a little bit early. If you're paying attention, and I don't pay attention too much on this this trading strategy, but if you want to pay a little bit more attention to the trading strategy and pay attention to the actual setups that you've got on the trade, and you want to look for maybe an earlier exit point based on price moving closer to the target, you can use divergence to be able to identify when it's time to get the heck out of Dodge. All right, and so I'm going to show you right here on this chart. It's a very simple concept. All right, price and momentum need to disagree. All right, when you have price and momentum disagreeing, then you have what they call divergence. All right, and divergence is a early indication that price is going to hit bottoms or tops. All right. Now, if I'm going to go ahead and pull it up right here, and I'm going to do this, I'm going to pull up this right here. And if you take a look at this, notice how price hits a low right here, but then it goes lower, right? And here the momentum is pushing up higher. So can you see how momentum is moving up, price is moving lower? Here we have a divergence. So normally what happens is this level right here becomes your buy opportunity. So obviously we're selling, but what we're saying is this is a potential bottom right here. All right, this is a potential bottom. Now normally what we do is when you trade divergence, there's a bunch of things that you can do to trade divergence. You can use a counter trend line break to confirm that price is moving to the right side of the trend line, and we want to go ahead and trade the break, or maybe even the retest of the break, which means that if price goes ahead and breaks through this level right here, comes back, retests, and then rallies up, that's what you're looking for. You want to go ahead and then start buying up here. Now, again, I'm going to go back to this, and I'll use the pound US dollar as an example in my demonstration as to what we're going to do next week in a trend trading based strategy, or let's say intraday based trading strategy. So what we're going to do here is, as price comes down to this bottom right here, this is clearly indicating that we're hitting bottoms, all right, and that price may not get to this target as of right now. Now, I'm not saying it's not going to get there at all. I'm just saying for right now, it looks like it's going to go ahead and turn around and head to the opposite direction. If you actually measure the distance, we're 33 pips away from it, maybe 40 pips, give or take a few pips because we're friends. You can look at this and say, okay, I get it, all right, maybe, just maybe, I got to start thinking about cashing out. All right. Now remember something. You got in all the way here at the top, so you're looking at cashing out about 236 pips. All right. 236, 240 pips. What is 30 or 40 pips mean to you if you've already started to bank in 240 pips? Right. You got 240 pips that you can bank in. So you could go ahead and look at this and say, well, I didn't give much for that additional 30 pips. I'm going to cash out, especially when I start seeing the signs. All right, when you start seeing the signs, all right, when the markets indicate that that it's on its way to the opposite side, we need to pay attention to those details. All right. Anyway, so this is the deal. So that's an early exit point. Now, you have the other alternative, right? The other alternative is this. The other alternative is to hold on to the position, okay, and just ride it out, right? Just ride it out. Now, you've got to look at the larger time frame to establish how much are you going to be riding it out. Well, if I look over here, fortunately, this week, check out this indecision right here, all right? With this indecision candle right here, it's telling me that maybe that divergence is just a temporary move to the upside. But we're not going to see a long-term move to the upside because the weekly is closing out with an indecision. If I flip this down to a daily time frame, right, then I look over here and I see, okay, we close out with a dark cloud cover, all right, here at the top. And with that dark cloud cover right here, price comes just shy of that resistance, and therefore we may be seeing price coming back down to reach this support, and maybe even further down south to go to this strong support down here over time. So it's going to go ahead and bounce down here before going back up again. So we can say that maybe, just maybe, we're going to go ahead and see price moving down a little below. If it closed out with that indecision on the daily, then that's a very good possibility. So I'm going to say that based on what I'm seeing right now, I could see price want to move down south. Now, there is something else I need to point out too, all right, which is pretty clear, but I'm okay with it. This looks like a rising wedge. Doesn't it look like a rising wedge? All right. This looks like a rising wedge right here. Now, rising wedges have a three-wave move, right? It's got to move threes. So we've got to look here. We've got one here. We've got two here. We're looking for the third upside move right here. Now, if I go ahead and push this up right here, then this is the rising wedge that we're talking about. Okay. So we're looking for price to move inside this, but it's going to be in a 5-wave sequence. So it's going to look something like this, where you're looking at, let me use my Elliott waves right here. Looking at something like this, where price goes ahead and goes 1, 2, 3, 4, and then 5 up here. Once it completes that 5th move up here at the top, then it's going to break to the downside. So I'm already saying to myself, okay, so if I'm going to hold on to this trade, if I'm going to look for the bigger move, all right, and the bigger move is going to be all the way back down here, all right, we're certainly going to test the bottom of the wedge right here. So as the market goes up here and then starts breaking south, it's going to be a very sharp move to the downside, but this is definitely going to be a key level of resistance where price is going to hit and start working its way to the downside. And when it does, it's going to chase after the start of that rising wedge and then even go ahead and move further down south towards that strong support level, which is indicated down here at 1.1975. Does that make sense? All right? Does it make sense? Now, what we're going to do is this. We're going to hold on to my trade. I'm going to hold on. If it goes up a little higher, it's okay. But one thing I'm going to make sure about is if price does trade through this level, if it does this, boom, all right, then what I'm going to see this as is more of a leading diagonal. What is the difference between a rising wedge and a leading diagonal? Does anyone know? Okay. Well, the difference between the two, a leading diagonal takes off to the north side when it creates it looks like it's fake news. All right, I have to throw it out there. I have to throw that one out. It's fake news. A leading diagonal is fake news to a falling wedge, or at least a rising wedge. All right, a rising wedge is an indication that price is going to break out to the downside, right? But if you see it as a leading diagonal, is a false indication of the price going to move to the downside. It actually breaks to the upside. And believe it or not, the pattern actually works out different. There's a different inside structure. We call it an internal structure. All right. I don't want to get into it right now. Maybe you need to go ahead and do some study on that. But an inside structure for a leading diagonal compared to a rising wedge is different. And you need to check it out and find out what the difference is between the two. Check it out. We'll talk about it on Monday. All right. I will go ahead and talk about it Monday, but I want you to go ahead and check it out because look, this is an educational channel, but I want you to go ahead and study up on this, and we'll talk about it on Monday. Okay. Remember, leading diagonal and a rising wedge. Check out the internal structure on the two. And you can decide based on the internal structure, all right, or at least you can see based on the internal structure whether or not it's going to be a leading diagonal or a rising wedge. Okay, too much information on a Friday, Gary. Come on, too much information. Hopefully you guys are not struggling. Oh, hey, this is JP. JP, normally I'm in class at this time, but good to hear. Hey, JP, how you doing, buddy? All right. Is this JP from Nicaragua? Is that JP from Nicaragua? All right, cool. All right, so that's the structure that we're looking at over here. Right, now let's go ahead and take a look at what else we've got going. So this is the pound US dollar. So pound US dollar, we're sticking on that trade, pound US dollar, and I get it, traders. Some of you say, well, big dog, aren't we seeing a fall in the dollar index? Yeah, I get it. I get it. So then if we see a fall in the dollar index, we're going to see a rally in the pound. All right. But we're going to still stick to the structure. We're going to still see what happens with those two pairs. Let's go ahead and take a look at Aussie JPY. We've got a bunch of unhit targets on all the JPYs right here. We've got one active trade on the Aussie New Zealand dollar. Let's take a look at the Aussie JPY, or these are the Aussie crosses. Starting with the Aussie JPY. So Aussie JPY, we see right here, we have a hit target this week. Yep, we have a hit target this week. No trading opportunity. Let's go to the Aussie New Zealand dollar. We know we're in on a trade in Aussie New Zealand dollar. All right, and we're looking for price to go ahead and retrace back down south. We get it. All right. Let's go ahead and take a look at the, and I'm going to go into a little bit more depth in the Aussie New Zealand dollar in a moment. Let's go to Aussie CAD right here. Aussie CAD is an unhit target, no opportunity. Let me go ahead and start updating the document right here. So this was a hit target. This one right here we are active on. This one is an unhit target right here. So there's no trading opportunity on this one. Let's see here. So that's no trade as well. And then the next one is going to be Aussie US dollar. Let's take a look at Aussie US dollar right here. Aussie US dollar looks like, yep, looks like we did pick up something on Aussie US dollar. Let's take a look here. Aussie US dollar, yes, we did. 64.24 is the entry point. So 64.24 is the entry point. All right. Was it 64.24? Am I just, let's see here. Sorry, 62. Where did I? Yes, 64, 64.24. Yeah, I got it right. All right. 64.24 is right. All right. That one we are currently in at the moment right now. And as you can see right here, we're selling towards that target right down here. Now, this one is another trade. Check how close we got to this one right here. 31 pips. Now, notice again, pay attention here, traders. Notice again, as price goes ahead and does this little lower, you see how we get this little correction and price moves a little lower? Did you not pay attention to the oscillator down here? See how the oscillator is starting to move back up right here? We're seeing the oscillator pushing up right here. Price and momentum disagreeing. And with price and momentum disagreeing, what happens? Price moves back up again. All right? Early turning points. Traders, check this out. Early turning points. For those who want to get out of trades early and don't want to chase for the targets, early turning points, traders could go ahead and say, hey, I'm going to get the heck out of Dodge down here as it takes out. As soon as it takes out the low, start paying attention to any bullish candlestick formation. It may not even be that. It may just be like, hey, listen here, I'm just going to get the heck out of Dodge as price gets out at that level. Now, this would have been, since the turning point right here, that would have been around about 178 pips or 176 pips that you could have closed out with in profit and forgot about the other 30 pips that was short of its target. But it is what it is. Now, let's take a look at the long-term outlook on this. What does this look like from a long-term outlook? Well, I actually have it set up right here where I have wave 1, 2, well, these I've got, sorry, actually I'm looking at I think we spoke about it in one of my sessions. We spoke about a 3-drive pattern, okay? We got a 3-drive pattern right here. So price turned at the 127 right here. So it looks like we're going to be pushing back up to 65.49. So expect another rally in pound Aussie towards around about 65.49 before it heads down. And that's if this pattern actually holds. Now look here. Normally we come back and retest this level. So bonus. Market goes down, hits this level right here. We get out of our trade. It hits our target. All right. The alternative on this, and we're always going to look at the alternative, is price is going to move up a little higher, get to the 127 right here, and then start working its way back down. All right. Eventually breaking through. Three drive pattern will eventually break through this channel and then head back down south. All right. So we're looking at this right here. We're saying if that happens, we'll be adding more positions right here. As price goes up and comes down, we'll make more money on the downside. Right? So either way, we're going to make money. We're just going to be a little bit more patient as to what it's going to do. All right? Whether it's going to create this 3-drive pattern and head up to that level and then drop back south, or if it's going to go ahead and completely move to our target within inside the next couple of weeks. All right? Now, with that indecision candle yesterday, we're not going to think too much on this, but hey, look at this. This is a bearish engulfing right here. And so this could be just a retest before price moves back down. Like I said, maybe we don't get up there yet. Maybe price comes down here first. All right. But either way, we know price is going to target that level. All right, it's still on the radar, which is important. If we still have that on the radar, we should be good to go. Okay. Now we got a trader right here says that the screen is not clear. That may just be your connection, by the way. My screen looks pretty clear based on my recording I'm seeing right here, so we should be good to go. Now Jeff says, yeah, why would you say that Aussie's dollar will rise to 65.25? So 65.25, just so we're clear. All right, I'm actually talking about 65.49. All right, I'm looking at 65.49. Hang on, let me just adjust my. Actually, let me just adjust my fibs here. My bad. So actually, the level I'm talking about, Jeff, is 65.62. Okay, and the reason why I'm saying, Jeff, that price could move up to 65.62 is because of a 3-drive pattern. Right, a 3-drive pattern looks something like this, where it goes up, comes down, moves up, normally goes up to a 127 right here, it comes down, goes up to another 127 right here, and then it starts working its way back down. That level there is this level right up here. All right, and that is at 65.62. All right, so that's the price I'm looking at, where we could see the third move in the 3-drive pattern before price moves down. It's a harmonic pattern. Check it out. Okay, that's the reason why I've got it set up that way. Okay, all right, good. Jeff says the screen is crystal clear. Yeah, so yeah, it all depends, of course, on your connection is how clear the screen is. All right, let's take a look at, so on the Aussie US dollar, we're in on the Aussie US dollar right here. We're active on an overbought condition. We are selling on this one right here, and we may stick around a little longer. All right, we may stick around a little longer on that one. Let's take a look at the two New Zealand CAD and US CAD right here. Let's go to New Zealand CAD first. And we take a look at the target this week. We have a hit target this week, no trading opportunity this week on the New Zealand CAD, and then on the US, let's take a look right here. This is US dollar traded against the Canadian dollar. Here we also saw price moving up to its target, no trading opportunity this week on both of them. So both of these right here are hit targets, and if you actually take a look right here, if you take a look over here, both of them were marked off as a low probability in any case. So it makes sense why we don't have trades on those. All right, we didn't expect any trades on this pair. All right, so this is how you have it. We got Euro Aussie. We've got pound US dollar. We've got Aussie New Zealand dollar. And we got Aussie US dollar. All in active trades this week. So we picked up 4 trading opportunities this week. Don't forget about the other 2 that we had in for the couple of weeks ago. The Euro Pound we got in on. And we got in on the Pound US dollar. No, sorry, my bad. The Pound Canadian dollar. So those are the 2 trades that we got in for a couple of weeks ago. So in total, we should have 6 trading opportunities. If you've been trading the way I've been trading, you'll have 6 trading opportunities. All right. That's what we got currently right here. No trades have been closed out this week. So no trades have been closed out this week. We'll see what happens next week. All right, so I said to you, hold on. Towards the end of the session, I'm going to be talking about, I'm going to be speaking about the new sessions that I'm going to kick off next week. All right, it's going to be linked up to what we're doing currently right here in the morning Forex coffee session, except it's going to be a different time. I haven't really decided on the time. So what you need to do is, number one, to get involved in that trading session, make sure that you have subscribed to the channel. And if you are subscribed to the channel, make sure that you click the notification button, because when I go live, all right, and I don't have a time right now when it's going to happen, but when I go live, you'll be notified and told with email, with the notification on your phone, you'll be told that I'm going live at the moment right now. So this is what it is. We've been looking at targets, right? And we've been trading towards these targets. And we've been looking at unhit targets, which means that the current week, all right, the current week creates an unhit target. Now, in that week, we either hit the target or the market doesn't hit the target, which we say it's missed the target. Now, if we hit the target's done. But if we miss the target and price moves away from that target, it creates another opportunity for us to be able to trade towards those missed targets. But what we've got to look for is the opportunity. So where does the opportunity present itself? The opportunity is going to present itself when price wants to work back to that target. So what we've got to do is we've got to look at price action and look for turning points in price action to go ahead and trade towards that target. Now, I have a trading system called Right Trader Max. I'll give you all those details in the live session. But I use what I call Right Trader Max, which is a trading robot that trades towards these trades, and I can deploy it either bullish or bearish. Right? Either it's only buying or only selling. So once I identify this turning point, and what's key here is that we pick the right turning points, just like I showed you the divergence strategy, right? When you can see divergence happening in the market and you can trade divergence, all right, it can help you find the turning point to get the hot spot on the hot spot when you want to go ahead and deploy any trading system in that direction. Because remember something, if you deploy a trading system in a certain direction, it may take some time before the market actually takes off. And in that time, it could pick up some trades that could take you, it could give you some, it could hit some losses before it takes off. So you're actually making up the losses before you actually in profit. But if we can pick that hot spot, if we can pick that time where the market's gonna turn, and when it turns, we're gonna be making money because it's gonna chase after target. If we can do that, right, and make good decisions on those turning points, then we'll be able to deploy a trading system that will be able to make money for us. Look, if you don't have a trading system, that's okay. You'll have to go ahead and do that manually. But we're going to be talking about those turning points, and I'll be telling you and analyzing the market and saying, hey, this is the currency pair that I'm focused on based on a missed target. This is what I'm seeing from a divergent point of view, and that divergent point of view is going to give us the hot spot to start turning on the system. All right, go ahead and turn on the system and look for price to move to a level. Now, why would I not want to just level in on that? All right, the reason why I just don't want to level in on that trade is because I want to find an opportunity to be able to get in as soon as price turns in trend. If trend is down and it turns to bullish, I want to go ahead and get in on that trading opportunity. All right, and put in tight stop losses so I can get in and out of that trade quickly, take profit, and then get the heck out of Dodge. All right, stop trading that system. I don't care if it doesn't get to the target, but if I make money towards that target, I'm going to be okay with that. And so what we're going to be doing in the next session, or in the new trading sessions, is we're going to be focusing in on these missed targets. We're going to be using a trading robot. If you do it manually, that's up to you. I'll give you links about what trading robot I'm using. We're going to be using a trading robot to trade, or at least I'll be using a trading robot to trade towards these targets. They're going to have good logic in to be able to identify short-term trend reversals, get in on the trade, and then when it gets into the trade, then of course there'll be a way that will manage that position to its target. All right. So that's going to come up next week. When? I'm not sure yet. I haven't scheduled anything out yet, but it's going to happen. There's going to be a nice branding around that session, just like we did here with the Morning Forex Coffee. We're going to have a nice branding around it. Check out for the links coming out next week. It's going to happen, and it's going to be exciting. So with that being said, traders, this year, I want to thank you everyone for coming in this morning. I hope you guys learned a little bit and got some good information about what's going on with the market. We will be going ahead and kicking off live again next week, Monday, checking out, of course, what the markets are doing in this setup. So with that being said, have an awesome day, all right? Have a great weekend. Relax, enjoy the weekend, and we'll see everyone back again for the live session on Monday. This is the FX Big Dog, wishing you peace, joy, and successful trading. Until next time, happy trading.